What's going on? This TerrenceRe, and I'm taking you into the close of the market this week. It's Friday. What is this? November 19th. Got about, let's see, got about 10 minutes before the market close. And one of the things I noticed looking at what you're looking at right now on the screen is DIA. This is the ETF for the Dow, right? So I just noticed it, maybe about 5 or 10 minutes ago. So I wanted to come on and do a video on it. What we're looking at right here is, some traders will call this like a M, and you can kind of see it, right? If you see how it's going up, you can right here pull down and then came back, and you got this like an inverted hammer. So a hammer the other way would be, here's another one. You kind of see how you got this long wick and it started to market down, and see how you got this long wick right here and started to market up. So you got this candlestick right here. Right here is the wick, and then this is the body. So, going over some candlesticks, and some people will call this not quite a doji. It could be a different form of a doji, right? But when you see it like this, it's pushing, kind of almost like pushing the market down. So basically, this is something where I get a high, then I get a low, then I get a high, and I get a lower low to end the week. And so when I get something like that, then I like to pull up my Fibonacci, right? Fibonacci retracements. I'm gonna go from this high to this low. I just want to see. Now, a lot of people it would be best to take this trade right here or right here. But making a trade in options and selling options, you don't have to be exact because you're going to get paid for time, right? So it's not the same as like if I was in Forex or trading futures, I would have wanted to get in up here. You may put a stop loss. I'm not using a stop loss. I'm just going to sell some premium, right? I'm going to sell a call spread. And so I don't need to be right directionally per se. It can just mess around out here and it's going to decay. So that's what I did. I actually think the Dow, which today you actually had a NASDAQ continuing to go up, but the Dow is down. So, and they're diverging from each other. I actually think the Dow can get an extended down move. So what I just put on was the Fibonacci extensions, and I used that for like price targets. So I got my retracement to see exactly where it might get in, where it stopped at. And ideally it stopped right at the 61.8. So anytime it stops in between here and here, those are, why I tend to look for changes in direction in the market. So, and that's exactly what I did. If you come over here, let's see. Come over here to the trade tab. I'm gonna come over here and look at the 28-day. I went to the monthly of the 28 days. And you can see right here, I sold the 23 delta and bought the 12 delta. Basically sold the 365 strike, bought the 370. It's a $5 wide. I collected $1, right? If we come to the analyze tab and analyze it, this is what it looks like. So basically set the slices to break even. 73%. I got a 73% chance of making money on this trade. And so for the most part, 73% of probability of profit. That's what you call a high probability trade. You say you're risking 4 to make 1. And yeah, risking $400 to make $100. Just that alone, the math on that alone is going to give you an 80% probability. So if you want a high probability trade, you're basically going for less money. A lot of people say, man, why would you do that? Because you're going to win 80% of the time. But you say that 1% of the time you're going to lose more, I'm going to manage the trade. And that's where management comes in, moving the calls up or down, maybe putting on selling the opposite side to increase your probability so you can manage it when you got options. And that's basically what I did. So we're going to another way, you don't have to put this up to look at it, because you can see you want to change this to out of the money, probability out of the money. So you can see here's the T0 line. This teal line is at expiration. So don't pay no mind to that. This is where it is right here today. It's moving. It's actually right here where this red line is, and you want to see it continue to go down. So probability of it staying away from here. Here's my break even at 366. And you just want to see it stay over here. So it's real basic. And then this right here shows my probability, which is even higher if I manage before expiration, which is what I'll do. Another thing I wanted to look at, we can look at the expected move for the SPX for next week. We're not expecting any big moves next week. So we come back over here to the trade tab. Let's look at the SPX, let's go 7 days out. And if we look out 7 days, it's showing 56, which is not a lot. So they're saying the market is pricing in $56 of movement in the S&P 500. So just that alone is showing that they don't think we're gonna get a big move. Well, with that being said, let's have a little, we may be able to, I was thinking about doing an expected move butterfly. I'm gonna hold off on that. I'm gonna hold off on, because basically with a 56 point move from where we at 46.97. That'll put you somewhere right around 46, 45, 46.50, and you can see some people making trades right there. So let's come and put that up on the chart and let's look at it. You can watch this video over and over again, just to, if you just want to. This will be the first time. This should be on my Facebook page as well. I set up a page for that. So you can see right here. That seems like that's a little bit more. Let's see, 46.97, because they already put it out there for your expected move out here on this indicator. Right here. So basically showing the market saying it's going to stay in this range. So if it stays in this range, it's a pretty good time to sell. Now this is the S&P 500, which the same stocks that's in the Dow is in the S&P 500. However, the Dow only has 30 stocks, if I'm not mistaken, 30 stocks, and they're weighted. I don't think they're not all weighted evenly. So I think that's right, but I know it's only like 30 stocks. So I could get a bigger movement, but for the most part, they'll probably move the same, be bouncing back and forth. So in times like that, you want to sell options. That's when you want to sell them, in my opinion. You want to sell your options when you don't expect a lot of movement, because then you get paid for time decay. Now look up here at the VIX. So we got volatility futures are up. So that means that if you look at my hands, so that means that the expected move expanded. So now you're selling on the outside of the expected move. You're selling either side or both sides in the case of a strangle or an iron condor. So that's what you want to do. You selling options, and you're telling the market to come beat you, right? So in 28 days, market, where I sold at, my call is up here. My call is literally up here. I sold the 365 and then bought the 370. So what I'm saying is the market got to beat me. I have to lose. In order for me to lose, the market got to come up here to beat me. So I'm saying if the market stay where it's at, keep going down, which I think that it will, I don't know for sure, or stays within this range, I win. It can go sideways, I win. And so that's the beauty of being able to say, that's the beauty of being able to sell options. Some news just came out right before I went live on Rivian, so I might as well talk about that while I have you on. Ford made the announcement that they are, and you can see Rivian was up, and there's the bell. See, Rivian was up on the day. Let's see if I can pull this down to a minute by minute frame and look at it. It just sold off. That's in the last 30. That candlestick right there was at 328, and then boom. That was at 328, and they just killed them at 328. So that sell-off happened because Ford, let's see if I can pull it up on here and we can see if I can find the news on it. Ford canceled plans to develop an electric vehicle, report says. Rivian Automotive and Ford Motor Company are halting plans to develop an electric vehicle, Automotive News said Friday, citing Ford's chief executive Jim Farley. Rivian stock added to gains after the report, while Ford stock headed lower. Farley told Automotive News that the legacy automaker, which has a stake in the EV startup, has growing confidence on its ability to win the electric space and develop its own vehicles. Farley took to Twitter on Thursday to expand on Ford's plans for EVs, promising that the company is ready to do whatever it takes to be the second largest EV maker in the world. So this right here, so that's Jim Farley, that's Ford's chief executive. Him making that statement. There were already rumors when Rivian came out that, I think, if I'm not mistaken, Ford owned 12%, had a 12% stake in Rivian. And so it was rumored that they were going to sell that stake anyway. So they IPO, the stock jumped up basically on speculation. And this is pure speculation, right? From 95 bucks to 179. And then Ford comes out and says they're going to sell their stake. So they made money on the IPO. I don't know exactly when they sold. I know there's somewhere on here where I can look and see. I probably have to go to FinViz, or I'm gonna do some research to see if I can see exactly when they made the announcement. But you got to look at it. Whatever price, they made money. The company Ford made money, and now Ford gonna make their own. So I don't know what this means for Rivian. If I was now I traded in here a little bit, buying shares and stuff, like scalping it, but I don't know if I would want to be a long-term holder of stock in Rivian at this moment, just because you don't know exactly what the stock is going to do, especially with them making a statement like that. I think that that the statement should have been made earlier. I think they had in mind what they were going to do. So kind of led investors on. If you bought this up here, you're hurting right now. You lost about 50 up from the high 179. So let's see what it's going to do. I would, if I had to make a guess, I say it's going to continue to go down, right? And then you may, if you want to get in, that's the danger of IPOs, right? If you're not an early investor, you don't know what's going to happen. Same thing with let's look at Robinhood. Look at Robinhood. You got Robinhood, when they made this IPO, jumped all the way up to 85 bucks. Now look, it's down at 28.80. So if you got in up here, you getting slaughtered. You got to hold it. Same thing. What's another one that did? Let's look at what's Donald Trump's SPAC? Is that it? Is this it? DWAC? Look at it. Bam. Went all the way up to 175. If you still holding this at 51 bucks, you got slaughtered. You got killed from the first day. Not the first day, but what is that, second day or somewhere back in here? So somebody look back here. I don't know what, I guess these are pre-IPO numbers or whatnot. That would have been the IPO. And then so somebody had it back here at $10. Look at this. So you got to be careful with these. And I think with this particular one, Elizabeth Warren is trying to get the SEC to investigate. Elizabeth Warren asked SEC to investigate Trump Media Company. So be careful with these IPOs. My main thing, I like to trade what I know. That's why when you look at my watch list, if you can see it, mainly on my watch list is the stuff that everybody trades. And you don't have to worry about, for the most part, you don't have to worry about that. You want to speculate? You got Tesla. It's a great speculating vehicle. You just want to take some bets. But try to trade what everyone is trading. These IPOs, yeah, you can get rich quick. You can get, but you can get hurt quick too. And on these IPOs, you just got to go into it understanding that. So with the premise, like this trade right here, obviously the bell is already hit. So you can't make this trade now, but you can see how it looks on Monday. Make the trade at your own risk. You own it. If you take the trade, you own the trade. Your money, your risk. I'm comfortable with whatever I put on. Hit the like button, hit the subscribe button. I'm getting better and better and better at going live, and better I get at going live, the more I'm gonna do it. And with that, I hope you guys got something out of it. Peace.